Markets are expected to stay choppy until there's more clarity on tariffs early next month. But there's one segment where the numbers offer some certainty, and that's the aging demographic in the U.S. and Canada. My next guest has some investment ideas in the space, and she joins us to talk about that. Neela White is Senior Portfolio Manager at Blue Wing Advisory Group, Raymond James. Neela, thanks for coming in.
Thank you for having me today.
Most people are looking at the market and thinking, okay, April 2nd has to come, and they're hoping that clarity will come with that. I'm not so sure. I don't think anybody can be certain. But what do you think? Do you think we should just be ready for the upheavals over a 4-year period?
I would have to say I take a bit of a middle line to this. Obviously, you don't want to overreact with what you're hearing in the news, but it's really hard to stay in a spot where you're not reacting daily and hourly to the news we're hearing. And I think it just goes back to fundamental rules, right? Age and stage, what is your risk tolerance? And I think the last 4 weeks has really educated all retail investors about really what does risk mean. I mean, risk is great to say I'm high risk when the market's going up, but when you see those big drawdowns, how do you feel? So when you get the next rally day, is this an opportunity to say, okay, what big purchases do I have coming up? What's my agent stage? Am I approaching retirement? Is my first year at university approaching? In which case, have that liquidity ready so you're not forced to sell in a down market, regardless of April 2nd or not, I think.
I think part of the problem, too, and you will know this, is that we're waiting for April 2nd, which will be sort of the next off the cliff, perhaps. But then we also have to wait for the government to announce how it's going to respond. And we've heard a little bit about the government saying, yes, well, depends on who the government is. That's another thing.
Yes.
We're going to support Canadians through what could be a difficult time. And we have to wait for that to shake out, right?
Yeah. And I think there's so many moving pieces right now that it's hard for anyone to have the clarity. It's hard for the market to determine what direction they're going to go. So I think really it's be vigilant, pay attention, and maybe now isn't the best time to start going full feed in. If you do see a dip, I think it's always prudent just to look at, okay, is the stock something that you really like? Is it valued? How do you think it's going to perform post-administration, 4 years, 5 years from now? Is the name going to still be around? Do we still need it? And I think just looking at it a bit more long-term for good, solid names.
Okay, let's talk about something you're interested in, which is investing in the aging population. And we haven't talked about this as much, but it's a sure thing, right?
Yes, it is.
We're getting older. The demographic in North America is aging.
Yes.
And so there's a certain amount of certainty there. What kind of sectors are you looking at in that frame?
So I like senior housing, I like post-acute medical care, I like long-term care as well. And I think when we look at a Canadian name, if we look at something like a Sienna Senior Living, they're very interesting because they have two arms. One's long-term care, which is co-funded by the government. So right there you see a stable revenue stream. And then it has the retirement arm, which is a higher margin, just because you can set the prices. So when you look at that, and they're at 95% occupancy because their long-term is fully, all the beds are taken. You look at that and you know that Ontario has a wait list of 48,000 people. You can see that regardless of what develops, you're not stopping people from aging and needing a place to live and needing care.
A never-ending supply,
Yes.
if you want to look at it that way.
Yes, correct.
And how do they generally perform, some of these groups that own the long-term and the retirement side? How do they generally do in the balance sheet?
You know what? They tend, because, one of my names is Welltower, because they have such strong portfolios with senior housing, they tend to do well. They tend to be defensive. And again, it's one of those things that there's so many tailwinds with these names that, obviously it's going to fluctuate with the market. Everything does. But at least to me, there's more certainty and less of an issue with how are tariffs going to affect them because it has a tailwind. We have the least amount of construction for long-term care since 2014.
I thought we were going to improve on that because of the pandemic and everything we saw there. Clearly not really happening.
There was a lot of spotlight shone during the pandemic. I'm not sure where that spotlight went. It went to other issues, but the numbers are still there. And, we ourselves one day, 10 years from now, 15 years from now, we're going to be looking at who's going to take care of us.
Yeah. Absolutely, and some not so far away. So let's talk about affordability under that same frame, because you want to be, as you say, believe in the product and believe in the stock. And some of these, I imagine, cater to a higher end group, and some cater to maybe more of a middle income group. What are you looking for in that sphere?
I think if we're looking at cost, if you're talking about from a personal budgeting point of view, I think everyone has to understand that cost of retirement homes are running anywhere from $4,500 to $12,000 a month. So if you think, I'm not going to age in place, I'm not going to age at home and bring services in, which can also be very expensive, what does my personal budget look like? So I think that's the first thing. And the second thing is really, what type of support am I going to need? And can my children do it? I mean, a recent study right now said that 2.7 million prospective caregivers in the next 5 years have already said they're not going to take care of mom and dad.
Yeah, that's not a big surprise, right?
So
that's just the way society has been going. It definitely seems to be like that. I want to get to, you mentioned Welltower, because they're an American company with an international presence, but they bought a Canadian company. So how did that work out?
Yeah, March 2nd of this year, they announced that they bought from the Ontario Teachers Pension Fund, Amica, senior portfolios, and that's sort of a higher end mature living portfolio. So that was their foray into Canada. So when you look at such a great portfolio on the Canadian side, majority of the homes are Toronto, Victoria, and Vancouver. That certainly gives them an in. So now they're diversified in Canada, the UK, and US.
And what do you expect them to bring to Canada with their investment?
They have shown that they run a very strategic portfolio all throughout the US and the UK. So I think as far as synergies go, I think it'll work out well. They certainly want a relationship with Amica's management so that they can further continue their growth into Canada. So I think as far as the running of the properties, they have boodles of experience with it. So it's not something unfamiliar territory to them.
Great. I do have to leave the conversation there because I'm out of time. But Neela, thank you for coming in. Appreciate that.
Thank you.